question is, what is the market going to do? Well, I'm going to answer that right now. I'm going to give you a quick analysis on the market, okay? All right, let's take a look at what's going on. The S&P, you can see we've been going sideways for almost a month in a very narrow range of about 4.5%. Finally broke out. Why? Because of the bank stocks. That's right. The bank stocks has really started to take the lead as of late, and you can see J.P. Morgan and my Citi, we're up about 15-20% in these stocks. And the nice thing is when we started at these stocks, we started at the right point, the buy signal right here. See that buy signal lined up beautifully with our sweet spot right there. Now, if you go and you take a look again at your XLK, your tech stocks, or you can look at the Qs, same thing, okay, just a little different holdings. They've been breaking out as well. But it's the volume you got to watch. I'm a little more concerned about the volume on those. Now, remember, our leaders in the Magnificent Seven stocks, Amazon, Apple, they've been breaking down compared to our bank stocks, J.P. Morgan, Citi, they've been breaking out and up. So that's why and again, we got in early on all these when we saw money was coming in, okay? Now, if you're asking what's the difference between the two charts, this is my chart, which tells me when money's going in and money's going out, okay? So it gives me confidence when I'm posting my stock here. I can tell if I'm going to make a decision to buy, I can say, well, I'm not going to buy here. I'm going to wait till it turns into here where some more money's coming in. It's really helpful to me. Okay, Goldman Sachs, great. Now let's go to, again, what's going on with your XLY. Those are your, it's starting to come alive now. If you look, same thing, going sideways. It's still underwater here. And these are your discretionary stocks, okay? And then under discretionary comes your Walmart, your Costco, your Home Depot, things you don't ordinarily need, trucks, cars. And so it's coming alive right now, but the volume's the problem. See the volume here? You always got to watch your volume. The problem's always, the volume's your fuel, it's your gas, it's what drives stocks. So now the energy stocks, okay, again, they've been pulling back, but be very careful when they pull back. They can go right back up because I don't know if you can notice here, but the trend is still up. Okay, and it hasn't turned red. That means a lot of money's not coming out yet because the trend is still up. You want the trend to turn, come back down, and then it would be a solid short, but not until then. Same thing with Schlumberger. Look how it came down, okay, but the trend is still up, and it is telling us, look, there's just not enough sellers in here yet. That's what I love about this chart. Okay, now if I look at the VIX index, the VIX index can get a lot of people in trouble because the VIX index says, hey, there's no fear. I can buy anything. That's when most people lose money on the VIX index, the fear meter, as we call it. Here's when the fear was high. Here's when there's no fear in the market. And that causes a problem. People just start buying anything and everything, okay? So my gold, again, we did very, very well with our gold. We started to buy gold way back here, okay? And we just started taking a lot of our profits. I still think it's going to break out, but it'll be the volume that's going to tell me if it's going to be a breakout or if we're going to end up where we're going to start breaking down and we start shorting the stock. And same thing with my miners. See that? We bought these way back here in the sweet spot. And that's what we do with a lot of our stocks. We always try to buy them right here in the sweet spot when money's coming in. And that's what an advantage that is. So the market, remember, we got to really depend, too. You got to watch that bond market like a hawk because the bond market is a great thing because it looks forward. It tells you, is the economy and market going to get in trouble? When yields are going down, doesn't mean to get scared, doesn't mean to start selling everything because it's really way out, looking forward in the future. But right now it's telling us with yields coming down, there could be a problem, all right? Because with yields coming down, it's saying the economy's not good, okay? It's just the interest rates are still too high. Now, also one more thing is we call the blow-off right here. When you get to the point in the stock market, when you see a pattern like this right at the very top up here, Okay, right in this area here. This is where the problem comes, because this is where people get into what we call the blow-off stage. They're denial, they're delusional, they're greedy. They just don't think the market will ever come down again. And the Wall Street people and people on these financial shows, the jibber jabbers, confirm that because they want you to keep buying. So again, this is the blow-off right here. That's Buffett's blow-off. Okay, at the top, this is where institutions and Buffett and these guys start selling a lot of their shares. Now, we don't know if that's going to happen or not, but the bond market will help us. So again, for more information, okay, and take questions on your stock, just contact philsgang.com.